everyone. I'm Major Garrett in Washington. Tonight on America Decides, that means you and I, can stop talking about tariffs in China. It's an embargo. It's a trade embargo. Why? Well, because China today increased its tariff rate against the United States to 125%. The current U.S. rate on Chinese goods, 145%. At that rate, effectively, we're not talking about tariffs. We're talking about a trade embargo. Possibly related to this, American confidence in the future of the U.S. economy dropped to the second lowest level on record going back to 1952.
The Chinese reaction this morning is not terribly surprising, but certainly unfortunate. No one else has retaliated against these reciprocal tariffs yet. China got out ahead and decided to do it.
We have on the show, probably inordinately, paid a lot of attention to the stock market. Well, today, after a very chaotic week, the Dow ended up, as did all the other indices, possibly with some imagined or real optimism that China does want to eventually strike a deal and end what is effectively a trade embargo. The rise on the Dow, just you can see it there, just over 600 points. Plus, here's a question. It's been playing out all week, right behind tariffs. Where is Kilmar Abrego Garcia? The Supreme Court orders the man mistakenly deported to El Salvador to be returned to the United States. But today, during a court hearing, the Justice Department under the Trump administration would not say where he is or what it's doing, if anything, to try to find out. We're tracking the latest on that case. But we start tonight with Fin Gómez, with me right here at the desk, and JD Durkin in New York. JD, this is not an easy question to answer, and I hesitate to impose upon you this burden, but try to wrap up the week that was in the equity markets.
Well, yeah, that's certainly no easy question here, Major. And of course, let's be clear, on any given day, it's really impossible to discern any one particular reason why the overall stock market goes higher or goes lower. But I think most voices on Wall Street would say, given how aggressive the selling was going back to last Thursday, April 3rd, that was a 5% drawdown, Major. The very next day, Friday the 4th, another 6%. We hit what's called oversold territory. And in fact, at one point earlier in the week, we actually reached what's called a bear market territory. And that's when the S&P 500 falls 20% off of its recent highs. And those recent highs, Major, we can't forget, it's only 6 or 7 weeks ago. February 19th was an all-time high for the stock market, both for the Dow, the S&P, as well as the tech-heavy NASDAQ. And that tells us just how quickly that sentiment shift has really worked its way across Wall Street. Uncertainty is certainly the name of the game. Today, we kicked off the new earnings season, Major. Today and over the next few weeks, that's really expected to be what we hear from CEOs. I think the market was overall oversold, and we're going to have some of these relief rallies from time to time, but a whole bunch of uncertainty in all the sessions in between.
And JD, let me follow up on that point, because you have lived through, I have lived through market fluctuations, big up and down. And usually those big downs are caused by external events. 9/11, the Great Recession, COVID. This is an internal event driven by the White House itself. That makes it fundamentally different.
Every major voice on Wall Street I spoke with the last few days tells me it's unlike '87. It's unlike, that was the Black Monday crash, of course, because this is unique. This is, as many people call it, the ego of the president. Some say this is the art of the deal. But regardless, this is manufactured and in many ways sort of self-imposed by the president. And to that regard, I think it largely caught Wall Street off guard. Although, as Finn certainly knows, Finn and I were colleagues covering the first Trump administration. We know that tariffs were front and center. Everyone knew that tariffs would be a fundamental part of the playbook this time around. No one expected them to be as sweeping, as aggressive, really caught Wall Street flat-footed. Now I think we have a better sense after the last 7 trading days to expect the unexpected, but I'm sure we are still in for a lot of volatile sessions moving forward on Wall Street.
JD, hang out there for me. I want to talk to Finn about this because, as we've just discussed, this is set in motion by the White House. There are political ramifications already unfolding across the country, particularly within the Republican Party. What are you hearing?
Well, first of all, I mean, I will say that in speaking with sources close to the White House, that keyword uncertainty is something I've heard a lot today, Major. Uncertainty of where we are because of this trade embargo, where we are. One person close to the White House told me when you're seeing the bond yields go up and the dollar go down, that's never a good sign. Like now, looking at the political impact, and I am a political guy, so are you, Major.
The political director of CBS News, ladies and gentlemen.
Indeed. There we go. And focused on politics, what I've been hearing is there is some concern. Look, we're only in April of 2025. but there is a lot of talk and a lot of chatter and some apprehension over the forecast of 2026. Yes, because look, in speaking to sources close to the White House, they have told me, look, some of these House and Senate Republicans who right now are solidified behind the president, most of them, look, they're going to start seeing some internal polling that's going to come out a little later this year, roughly around the summer. And when they start seeing some of that and looking at the pace of where we are on this trajectory, it could have a negative effect. And they are nervous about what this will mean looking ahead to 2026 and Republicans' changes.
Finn, at this table yesterday afternoon, Kevin Sheridan, a pretty plugged-in Republican strategist, said this pause helps, but the president and the White House need to start announcing some trade deals sooner rather than later, because if it doesn't, then this uncertainty that you just mentioned will not only continue, but the sense that these negotiations are going to land something important will begin to dissipate.
Right now, what we're hearing from the White House is trust, trust, trust. But what even some of his base supporters want to see are results, results, results. And you're not going to see that unless some of these trade deals that they're talking about, 75 plus, where are they? What I've been hearing also is that we could see, again, from sources close to the White House, that we could see a deal. A prediction was that we could see a deal with see a deal between the EU and China before we could see a deal with China and the U.S. Look, some of our trade allies or former trade allies are looking elsewhere because of this. We're not the only game in town, and we're seeing that across the landscape.
JD, I want to go back to you in New York. You covered the first Trump administration. I did. Finn did. One of the things that was part of that tariff conversation then was a process that played out, investigations under applicable law. Now the president's declaring an emergency, and it's a global trade impact that no one can quite either measure or understand its duration. That's part of this volatility, is it not?
It absolutely is. And to the point about earnings season kicking off this morning, we heard from Jamie Dimon, the CEO of JP Morgan Chase. We heard from Larry Fink at BlackRock, the CEOs of Wells Fargo and Morgan Stanley, and many others. And it's very difficult for any publicly traded company to issue forward-looking guidance. And we can't forget, that's ultimately what the stock market invests in. You think about it psychologically as an investor. You put your money into the market for the hope, the expectation, the optimism that tomorrow the dollar you put in will be worth more than that dollar is worth now. But it is nearly impossible to get those forecasts from these publicly traded companies when the president can say or tweet one thing at 10 a.m., say or tweet something fundamentally different by 2 p.m. And that whipsaw effect back and forth and that whiplash that all of Wall Street is expecting, that really underscores the difficulty for investors to have confidence in what the president says, given that can change hour by hour.
Finn, I do want to also ground this in reality, because this week was important for the White House. House Republicans passed the budget resolution, which keeps the process of obtaining tax cuts and other parts of the economic agenda on course. There were two very positive inflation readings. Yes. And the job market remains relatively strong. These are low-lying but important fundamentals. And I don't want to forget that in this conversation.
Oh, absolutely. The president has had some wins here. Like if you look at some of these metrics, including those inflation reports, and not just looking at the consumer confidence. However, some of these metrics were done before, were pre-tariff.
Right.
We have to remember that. So really, we're going to see some more metrics come in the future. That's really what we have to look at to really determine where we are right now in our country.
Uncertainty in Wall Street, uncertainty at 1600 Pennsylvania Avenue. Finn Gómez, JD Durkin, thanks so very much. I appreciate it.